Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, and let's get started with the charts. Quarterly time frame. Price pushed higher and is now hitting the 3-month SR level that I was marking out. This level will decide whether we spend more time moving sideways here and maybe even retest the lows or nearby areas, or if price breaks through and we see a move higher. However, I think in all cases, we will still see some sideways movement. Either we range below this level or we break above and then move sideways afterwards. That's what I'm looking at currently. Simple higher time frame bias based on one key level. If price stays below, we can range and retest the lows. If price gets above, I still expect range behavior, just at higher prices. So of course, if there is a short setup from here, it needs to be taken. And if there is a long setup while price is above this area and retesting it, then that also needs to be taken. Next, weekly chart, the 202-day cycle. I was looking for the bottom formation here. Of course, we always have different scenarios, but in the end, our actions matter more than 1,000 charts. In the end, this turned into a really nice long and spot buy area because a lot of confluence came together there while most people wanted lower prices. Honestly, I mostly remember bearish setups when price was down there, so sentiment was clearly negative. But price pushed higher, and now we are back inside the previous range. I marked it out with boxes so you can better understand how I basically look at price action. All we really need to know is what happened in the past. For example, here we had this price action, and after some time, price broke back below the area and it acted as resistance. Then price broke above the lower area and moved back into the previous range. So from there, I focus on the previous range itself. It has its own levels, but the main idea is basically trading the previous range again. If price finds acceptance back inside, then I look for the mid area and afterwards for the upper area of that range. That means if price finds acceptance inside, I look for retraces holding support and then target the next level. Of course, price can still reject because it's resistance, but once it reclaims it, then we aim for the high of the previous range, because that's what happened in the past, and those levels tend to get respected very well. So for now, price is inside the blue box area. We talked about this scenario many times while price was still at the lows. First, we were watching whether this level could break or not. Then, once it broke, we looked higher unless price lost it again. That didn't happen. So now price keeps pushing higher and is hitting the mid area of the previous range. And not only that, we already saw some reaction here on the last drop. You can see the last major low. That had a chance to become a strong low, but it failed. So now price broke above it and we got a weekly close inside this SR level. That means either we get a rejection here because it is resistance, or this area holds and we continue higher. I would say if price starts losing last week's low and closes below it, then it opens the door to retest lower levels. Until then, this area remains support. Still, I want to give it a few more days and see what Monday and Tuesday do here, and whether price is able to break above the Monday range or not after it forms. For now, this is our weekly open, and we have a Monday high and low. So if price breaks down on Tuesday or Wednesday, then this could become confluence for lower prices, because this is an SR level, and we would also have the Monday range acting as resistance. And if price breaks above, then I'm aiming for the next SR level in this range, which would be the last support area, but also basically the highs of the previous range. If price reclaims that, then we look for the same thing we did down here. If it rejects, we look back towards support. If it breaks above, then we aim for the mid area or higher, level by level. But for now, we hit the next key area and need to see what happens here. By the way, from the low to the high, we already had around a 38% rise. The trades from the lows and the spot buys are in really nice profit. Even the bigger 65K trade is around 28% up. Happy days, I would say. Now let's check out the other targets and support levels based on the setups. The 5-day EMA setup remains active. As you can see, price is still above the 5 EMA. This setup activates when a 5-day candle closes above the 5 EMA and remains active until price closes back below it. This happened at the lower part of the range, and we have already seen a really nice rise so far. It was never invalidated during the whole move up, so one could basically hold longs from the lows all the way into this area, and even now price is still above it. So for this setup to remain active, we want to see price staying above it. A retest is completely fine, and actually very likely, because this EMA very often reconnects with price. So if price comes down there, we need to see if it holds or not. Wicks down are fine, but on a closing basis, we want to see 79.4K holding. And if you are bearish, then of course you want to see a close below it. Currently, this level more or less aligns with the 5-day range breaker. A really nice level because it formed above the previous weekly high. That means if price comes down, this is potentially the first support area, and only if it gets lost do we start looking lower again. I would say losing this level would probably take out a lot of long stops from traders still holding longs from the rise. But that's something we will talk about if we actually lose the level. Until then, if price comes down, this remains support. On the left side, we also see the EMA cross setup. This is now on the 5-day time frame. We already looked at this setup on the 3-day and 4-day time frames. By the way, it works on every time frame, but the lower the time frame, the more setups you get and the less accurate they become. Sure, you can still backtest them on lower time frames like the 12-hour, daily, or even lower. I personally don't really use it below the 12-hour because I haven't tested it enough there. For example, here on the daily, we can see one setup failed around the range lows. We had a cross, but price broke back down before reaching the target. Then we had another one, and it hit the level. Then another failed, and another played out. So even here alone, we have 2 failures and 2 successful setups. That's why you need to test it properly and understand the probabilities on each time frame. However, on the 3-day time frame, we had an 82% chance for price to hit the EMA target, and it did. Then on the 4-day time frame, we had an 81% chance. And again, it worked out very nicely. Now we have the same setup on the 5-day time frame. This one never failed in the full history of BTC, but it's a very high time frame setup, so it's extremely rare, only 8 times in BTC history. Not much data, but still interesting because all of them reached the target. For now, the target is around 84.7K and moving. That means if price range is here for a while, the EMA itself can move lower. Anyway, that is usually the minimum target. For now, the setup remains active and would only be invalidated if the EMAs cross back down. And I would say that becomes much more likely if price loses the 5-day SR level. If that happens, then yes, we would look for a longer range and basically wait for the same setup again, maybe even starting first from the lower time frames. But until then, these levels remain support areas on the first touch. Like on the daily. If price loses the 5 EMA, then the 21 EMA comes into play, and so on. Those are not bearish setups unless price starts crossing back below them, and then we would look for lower. By the way, I'm also watching the 7-day time frame, and here we also have a really nice SR level forming. I will mark it out later. But what I'm mainly looking at here is the cross that might happen in around 1 or 2 weeks if price is able to hold here or move higher. Then the target would be around 86.4K and changing. This setup also has a 100% hit rate so far. Doesn't matter whether the targets are lower or higher, it's still played out every time. So we will take a closer look at that in the next 2 days around the next close and judge from there. For now, I see this SR level as a really nice confluence area for support, and if it gets lost, then for resistance. Next, we are looking at the yearly fib time and price chart. Here, I want to see price hitting an SR level, while at the same time getting a time confluence. We traded that twice this year already at the lows. Then I wanted to trade the next one as well, but that setup became more tricky because price was not really hitting a proper support or resistance level during the timing window. So for now, I'm waiting for price to choose the next direction. It can move down into support and hit the next time window there, or we see a rise into resistance, and from there, I would look for weakness. There are, of course, a few scenarios. Price could move up, hit both the timing and the resistance level, and reject there. That would be the optimal scenario. But price could also break higher first and then come back down to retest the level. That's where things become tricky again, and then we would need to judge whether price is more likely to hold or not. For now, I would look for the next support area around 79K, which aligns more or less with our 78K EMA area. And for the upside, I'm looking around the 84K area and maybe higher. For now, at least based on the EMA setups, that remains the focus. We can combine them, and then we can see the target would align really nicely with the overall idea, while the first support is here at the first EMA area. On the 7-day time frame, we can see the target would be higher. So that would be the idea if price breaks above that level. It's not simply because I want it to happen. No, it's because we would actually have a target there if those conditions are met. For now, as long as that has not happened, the 5-day area is potentially still the level for a pullback because it has such nice confluence if price reaches it at the right timing. What I mean by that is, if price just moves higher now, before the yearly fib time, then it's not the same confluence anymore, and I may need to wait for the 7-day target to get hit together with the yearly fib time instead. So in the end, it all comes down to what price is doing when it reaches the timing window. In between, price can still move down or up. If it moves down, I look for support. If it moves up, I look for resistance. The 7-day more or less aligns with the 79K level here. So a wick down is completely fine. But if price starts closing below it, then we look for the next lower levels. With that said, for now the 5-day remains the main focus unless it gets invalidated or we get a confirmed cross on the 7-day time frame, where the focus would then shift to the next higher target. Next chart. Price is currently hitting the SR level we were talking about. Of course, this is not support yet because price is coming from below this level. Yes, we have a weekly close inside it, but now we also need this level to hold. Otherwise, it can simply turn into a tap into resistance and then a move back down again. Level-wise, what I'm looking at is this last low that price made on the daily time frame and this daily order block we had on the left side. That was one of our targets for the longs, but now price broke above it, so technically it can become support now. That means price can come all the way down, retest it, and form a higher low, or SFP the low, and still remain in a local daily uptrend. But we need to go step by step. And to be fair, we have a lot of levels here because of the structure, since we only have higher highs and higher lows. So I can mark out many levels here. But the main area for me would be the 73K to 70K range area. If that breaks, then yes, a move back down into mid-range becomes possible. But let's say price comes down and hits this level. It would also be a retest of the trend line. And if that happens inside the daily cycle timing window and the yearly fib time, then that's where I would definitely look for longs first. Even if they fail, that would still be a very good level and strong confluence for me to take a trade. But I would only aim for that level if this daily order block gets lost. Meaning, if price comes down, is not able to SFP this last low, and closes below it, then yes, I think we first see a fill of this big wick and ultimately a test of some liquidity below. But first comes this area as support. And now if I switch to the 7-day time frame, you can see it also aligns with the 7-day and 5-day SR levels. So it's a big area and also the invalidation area for the EMA setup. So if price comes down there, it will be support first, and only if lost, resistance. That is, of course, only if price moves down. For now, price is chopping around here and we don't have a clear rejection so far. Maybe it comes, maybe it holds, we shall see. All I know is that I would be interested in the levels below, especially if they get hit together with a time confluence. If price holds here or retests the lower level and holds, then I would look for a bounce into our EMA targets and the yearly fib time. Now we also have the monthly statistic levels here. Time-wise, we can see that on average the highs for the bearish month are already reached. So if you are bearish, then this is the top and down we go. Then we have the overall average, which still allows for a new high, and then the average for the bullish month, where we still have some time left, which more or less aligns with the yearly fib time. That means if price rises, hits all the EMA targets, reaches our resistance, and at the same time the average monthly top timing is reached while also hitting the yearly fib time, well, That's really nice confluence to take some TP on longs and maybe hedge them as well. And if we talk about the highs, then we can also talk about the lows. Here we have the averages already reached for the lows, except for one remaining scenario, and that's the bearish month scenario. And here we can see it also aligning nicely with the yearly fib time and the daily cycle low timing window. So again, really nice confluence, especially if price hits support there, because timing itself does not give you a price level. We need to find those ourselves. So of course, if price spends time here and only hits the first support level, then I will still look for a setup there. It does not have to go lower. Lower is simply the bigger level, that's the difference. But I would still look for a setup on the higher level as well if we see a range and chop here. And that basically covers what I'm looking at. Daily cycle-wise, we also saw BTC make a new high after the mid-cycle. So the next expectation would be a higher low, whether that happens here, after a deeper move down, or even after another rise. By the way, that also makes things a bit tricky here, because price is rising, technically hitting resistance and yearly fib time, which gives nice confluence for a short. But at the same time, we are entering the daily cycle low timing window, which is technically a time area where a low can form. In the best case, we see a move down, hit support, but it does not have to go down. Price can also simply spend sideways and give only a shallow pullback. So we need to keep that in mind. There is potentially a bearish setup, yes, but it flows into a bullish higher low scenario afterwards. So basically, I would prefer price coming down before the timing window, because that would be the better setup. Price already retracing into the daily cycle low timing area while hitting the yearly fib time. That's cleaner than price just rising into resistance and giving a short setup. But that short setup could still be part of the bullish structure where price later forms a higher low. For that, price does not even need to dump. It can just go sideways. Interesting times ahead, and it will be fun to solve that puzzle, of course. But hopefully, you now know what we need to look for. You can let me know in the comments what you think about it. Next, we take a look at the Ribbon indicator. Really nice tool. It makes level-to-level trading much easier. Here it's similar to what I said before. We have local support here, but the main support is rising and currently sits around 79K. This is where we also have our 7-day SR level and the daily swing low. And on this indicator, it's the midline. That is the key level. If price is above it, we look for higher prices. If price is below it, then we look for retracement, basically into the next lower levels. That can mean just the next support below or even much lower. We will monitor that if it happens, of course. But for now, this is another support confluence. Of course, every trend ends somewhere, but level-wise, we will only really see that once support gets lost. And the pattern action we currently have above shows an 86% breakout probability. So it has a high chance to break through if price holds here and does not break below the midline. That is currently another confluence for the 7-day SR level and the EMA setups targeting higher levels, as it stands right now. So the conclusion is that we have a few nice support levels, and we still have higher targets until the setup gets invalidated. That means on retraces and around the levels I mentioned, I will look for setups and target higher. Of course, if that fails, then I look for the next support level and try again from there, step by step, level to level, ideally with time confluence. Now let's take a look at ETH, because Ben asked for it. So I will mark out a few levels. BTC, we have a few levels. First of all, the momentum on the higher timeframes is still up, but on the lower timeframes, a lot of indicators are already deep in the bullish control zone. That's not bearish for now, but if they start to shift, then yes, it could become bearish. For now, however, the higher timeframes are still pushing, so we need to wait. Locally, we have a bit of a mess here, but let's see what we have. Currently, structure broke up again with the last push higher. Now, both the 4-hour and 1-hour are bullish. The 1-hour remains bullish as long as price stays above yesterday's low. And we also have a big weekly open candle. So even though the 1-hour is up, I think price can still fill some of that space below. Because for now, we have a weekly open followed by a move down, which is not necessarily bearish in the first place. If price opens, moves down, hits support, and then on Monday or Tuesday reclaims that level again, then that would actually look like a weekly candle forming the low of the week. If price moves up now and then loses the level again, then yes, a weekly high could potentially be forming, and it could turn into a bearish week. Of course, there are situations where price just keeps dumping after the open or keeps pumping, but those things we cannot predict. Most of the time, however, highs and lows get formed around candle opens, so I can only tell you what I'm prepared for. If price keeps dumping, so be it. But for now, I still look at this as the potential formation of a weekly low. Price opened, dropped down, and if it hits support and reclaims the weekly open again, that is bullish, unless price starts losing it again or simply ranges here. Then the bias would shift from bullish to range, and so on. So even if we eventually get a bearish week, I would still like to see a high get formed first. Otherwise, we just continue looking for support levels. The first support level would be here, and that would also clear the weekend price action, which is what I would like to see first for now. I will look for reactions there and decide if I want to take a long or not. If that level fails, then I start looking for lower levels and eventually the 4-hour swing low. The average loss for today is sitting right at this first level, so I would say that's the area to watch today. Something like a 3-wave move down and then finding support there. But as said, for me, I will watch the reaction first and wait for some confluence if we get the drop. If price simply rises from here and makes a new high, that's fine as well. I still have the rabbit box set up running for this move. Also, one short hedge got stopped out on this breakout, so for now, I wait for the next decision. This would be one of the scenarios. If it fails, then I'm looking for 79K to 78K as the next area. Lower timeframes are a bit tricky here. I already had a few scenarios that looked like reversals, but in the end, price just shot higher. So yes, a bit messy, but that's also what uptrends look like sometimes. We can get bearish setups that need to be ignored, and still at some point it makes sense for me to take a hedge, especially if I already have many longs open. Here on the 6-hour, I also had this trade from the lows and hedged there as well. The short got stopped out, and I took some profits on the spot position to cover the hedge loss. Now, price pushed higher and only slightly missed the target. This is a target that gets hit sooner or later, so I keep my spot position for it. Specifically my spot for this setup, and if price moves lower, then I will compound at 76K, 73K, 67K, and so on. It doesn't have to go that deep. The setup is not about how many levels can be compounded. It's about the target, and that target will be reached at some point. So I keep the trade open for that. Of course, I also keep my other longs running from lower levels, so nothing changed there. It's just locally a bit tricky. With that said, for now I wait a bit here. I'm not missing any longs because I already have a lot of them open. And for the next leverage trade, I will look if some levels get cleaned. As for the next short, I need to see maybe I don't short again until the next yearly fib time. Of course, I risk missing out if price just dumps from here, so yes, I need to see and decide. Hedges often get stopped out, that's what they are designed for, but still, sometimes it's probably better to just wait. With that said, let's now look at ETH as well and mark out a few levels. So what do we have here on ETH and SOL? For ETH, I would like to see BTC dominance breaking down, as shown on the chart. And on ETH BTC, I would like to see price start pushing higher, while BTC either goes sideways or keeps moving higher slowly. Basically, we need ETH strength. But if this also turns into a breakout like BTC, then this current move would simply be the retest, and ETH could follow higher. Right now we have sideways action on ETH, and it is still above support. So from here, it is actually a long setup. Breaking back down into the range would not be nice because, as you can see, it would bring price back into the range again. So this first area here and the second lower area are the two zones where I would look for longs. If that fails, then I think similar to BTC, we would see lower levels. And if ETH stays weak, then ETH could even make a new low, while BTC only forms a higher low. For me personally, I trade ETH mostly on spot. I already have spot trades open and nothing has changed there, but these are the levels I would use if I traded it actively. So for those of you interested in ETH or SOL, these are the areas I would watch and trade. So from here, it's either up and following BTC or dumping again. As always, manage your size properly, and honestly, spot is probably best, because then all you really need to do is hold until the target is reached, unless the coin goes to zero, of course. And for SOL, I have a rabbit box set up on the monthly time frame. I bought some spot here and I'm holding it toward the target. At least that's the current plan. Of course, I can always take profit earlier, but for now I just bought some, not too much, not too little, just enough to have some extra exposure for this potential setup. For now, it looks more like a 3-wave move, but keep in mind it can still become a 5-wave structure. That would mean another low, and that's where I would add more. But for now, I bought some here, and I'm holding it. And that's basically it for today. I hope you enjoyed it. We still have some choppy price action here, but the higher BTC targets are not invalidated. However, at some point there will be a retrace, and I just want to trade it whether it hits the targets from the top or from the bottom. Patience, as always, is key. I wish you a nice day, and see you in the next one.